It is time to take a look at the week ahead in the markets. I am Dr. Stock, Doctor of Education, and if you notice that your Thanksgiving food is talking back to you, it's probably the cranberry sass. We're going to take a look at the economic calendar to see what's coming up. We'll also take a technical analysis view of the markets. And I have one to put on that I don't put up very much, but I think it's very much worth taking a look at, especially in light of what the Fed has told us most recently as of their meeting. And I will also tell you about where you can see how I'm playing in these markets that are coming up, and then also about my options course, which I just wrapped the recording on my first applications video for that, 4 different scenarios, pretty cool things. And then also the free stocks that you can get from Moomoo. And then finally, the economic calendar that we have here. So this week coming up, we have a lot of Fed speeches. You're going to see them show up all throughout this week. Look for the bold text over here that can start to help point that out. The sleuths that we have coming out, even though it's not highlighted, not emboldened, that we have right here, it could still be something that if we see talk of further credit tightening or significant credit tightening over what we've had previously since July's report, then that's something that could most definitely affect the markets, put down pressure on it. So I think that is important. If they say no significant changes in credit tightness, that could be something that is nothing at all for the market. So we want to keep on watching for that. Moving on, you'll see all the different Fed speeches we have down through here. Total household debt we can watch as well. Moving on there into Wednesday, we have Jerome speaking at 10:15 a.m. in red to market as an important thing to watch for us, along with a lot of other Fed speeches that are out there as well. Thursday's initial jobless claims coming up for us. We want to watch that. Look for further softness there. That can be upward pressure on the markets unless we go too soft, in which case that can point towards more the recessionary side because there's a lot of layoffs happening in the different businesses that we have, the different companies throughout the United States. So we're going to keep an eye on that one. So far, it sounds like labor conditions remain tight. We'll see how long that holds out if it continues throughout 2024. So that one, I don't expect any major changes. So we'll happen to see if we get surprised on that. Right now, the consensus coming in at 215, which wouldn't really move us too much if we came in around that consensus. And we keep on sticking right around those numbers. So let's move on. So we got some more Fed speeches. Powell at 3 p.m. on Thursday. And then at what turns out to be 11 a.m. it looks like on here, the Michigan consumer sentiment coming out. And this could be something that might actually be 10 a.m. Maybe it hasn't been adjusted for daylight savings time yet. So you want to watch for that one. So what to look for in Michigan consumer sentiment, we're looking for better economic outlook for upward pressure. And then we're also looking for lower inflation expectations also for upward pressure. If we switch those things, that we have a lower economic outlook and that we have higher inflation expectations, that's downward pressure for the markets. All right, let's get into the charts for the markets themselves. So I'll bring that down and put this up. Here we're looking at SPY, which tracks the S&P 500, and we popped up above. Look at that week that we had last week. So if you're looking at the markets, you were certainly part of it. The volumes on this were decent, and we had all the technicals there for us. We had this point of confluence down here. Let me adjust this so we can see a little bit better away from the volume bars. Here's the trend line. Here's the support line. The two of those met up, smooched a little bit, and then we ripped up from there. And then it's also significant. That's actually Friday that happened. And then here's Monday that we had to look at. And Bob's your uncle. We ripped up from there. And it was a really good week for us. Made a lot of money. I think a lot of people's portfolios with their long positions turned really green last week. So what's good about what we see right now? Well, we are up above this thin blue line, which is the 50-day. We have a high wick. Not great for us. There was expected to be some profit taking. We pulled back a little bit from those highs that we got, but we did stay on top of the 50-day. That is a bullish sign. We also broke out of the bearish channel. That is another bullish sign that we have. Another bullish sign is being up above 50 in the RSI. Now, it would be normal to have a little bit of settling after something like this. Coming back down and retesting this trend line could absolutely happen as we watch the market come out. It is right now looking like we're in pretty good shape. I'll bring up what we have for DXY, which tracks the strength of the US dollar, and the 10-year Treasury Yield to show you what we're seeing there and how it's impacting it. But as of right now, we don't know exactly where the top is for this, and we also don't know where the bottom is for this. We don't know what trend to expect coming up from here, but right now, things are looking for a decent November, and so the inflation reports that actually come up the following week are going to be the big things, and I expect some sort of drawdown to happen in the markets between now and then for that concern over what exactly we'll see. And should we get strong inflation numbers, I think it'll be the last month that we have those for the next 2 months coming out for November's numbers, December's numbers, which happen in December and January. So we'll have to watch for those. For QQQ, you can see what we have here, that we have come down and peekaboo down below this, and we can actually adjust it, and maybe we see a little bit more confluence there, and I should be able to move that. So you can see just how significantly we sold off with a lot of tech selling off throughout last week. And then this week, man, oh man, did things turn around very nicely for us. The Apple did make us a little bit nervous, but we were able to come up and we were able to almost touch this top trend line, retreat a little bit. This light blue line here is the 50-day, and we're up above it. That's a bullish thing. We're up above the 200. Both of those things are good. Breaking above the top of this trend is going to be even better for us. And we have NVIDIA earnings coming out towards the end of the month. It's November the 21st, I believe, is when that happens in the after hours. That is the last of the Magnificent 7 stocks that we have to report on that one. So for this one, on the QQQ, which tracks the NASDAQ 100, we did not break above the trend line like we did in the SPY. The SPY had a lot of companies that were very well pressed down, and that we actually start to see those inflows come into it, and a lot of stocks that have been beaten up over time really start to perform, besides just what we saw in tech, which so far we've obeyed this channel, and RSI is looking good. We know that we're in a different situation with the Fed, that it sounds like right now that they're pausing. Possibly that we see another rate hike, but maybe not happening. We even see that when we look in the bond markets as well. So last thing that I want to show you here before we move on to one that I think is very much worth looking at, that I don't talk about on here very often, but I've talked about weeks ago over at the Discord, which you can join by using that Patreon link down in the description. I'll show that one next. So here's DXY, tracks the strength of the US dollar. We are down below the 50-day EMA and SMA on this one, so exponential and simple moving averages. And we've also crossed down below 50 on the RSI as well. So we could possibly see the strength of the US dollar continue to decline. And if that is the case, that we continue downward, maybe we reach that 200-day that's down there. I thought getting below 105 would be good for us. I didn't know if we would see it. We actually did. It closed down at 105.069 as we look at this one. So down a full percent. And that was something that has been very troublesome for us. If we come back down to where we saw the bottom of this, it was right around that July 19th time. And then as that climbed up, the markets went down, kind of stuttered for a while. The markets went a little bit crazy for a while. And now that that's dropping significantly, the markets have also rallied significantly. Another thing that is tied to this, that is closely related to this, is the U.S. Treasury Yield. So we'll look at the 10-year Treasury Yield that we have on here. And I said dropping down below 4.8 was going to be important for us. Well, let's take a look at the drop over the past several days. 4.8, by the way, is all the way up here. And man, oh man, not only did we cross down below it, but man, we smashed through that down to a low on this one, below 4.5%. That is an incredible drop that we have. And this took place since Jerome Powell came out and spoke on November the 1st. So that has really changed the game for us. And that's why I think the markets could continue to rally throughout November. And if we get good inflation reports for the month of October, when the middle of November hits, November 14th and 15th, I believe are those dates, that could be that place where we see some hesitation. Maybe we rally further if we get good numbers coming off of that one. Energy prices might do us in for that. We're going to have to just watch it. But if it does do us in, I think it's a short-term thing that possibly from the markets, even if they might have enough momentum to push through that anyway, assuming that they still think that the Fed is done. So unless we get something really surprised to the high side on those inflation reports, I think we're still in good shape. Let's look at the hourly on this. So this is the US 10-year yield, as I mentioned before. And when you look at the sort of drop that we experienced here, and in this one, if we, let me get the right view for you, right about there is what we'll say it is. So if we go back in the dates, Wednesday, November the 1st, and I showed this in a previous video of mine, if we go to that 2 o'clock hour, that's right about here, and you can see we're just at the bottom. We're just at support on this thing, and it just continued downward throughout the end of last week, and that has been great for us. So if I zoom out a lot on this, you can see that we even came down and for at least a little while passed down below this previous low that we had back in the middle of October. But we have a ways to go. Let me reset the view here so we can really see it. Zoom out some more for you. We have a ways to go until you can see us down at these previous lows that we had. So all the way back here, this is back in August that we were significantly lower down there, just over that 4% mark. And if we go back even further from that, this is around that July 19th time when we see that we've had to move down, and then the market started just, the bonds that we have, the yields just started moving up and up and up. This is probably where a lot of that shorting had taken place with the different bonds that we had, the different yields that we have. That was also around the time that Janet Yellen was putting out that we were going to sell even more U.S. bonds. So that would be something flooding the market pushing down the price of the bonds, pushing up the yield cost that we have. And so that is what you see being reflected in here. And finally, we're getting some reprieve on that one. And it is possible that we retrace up a little bit on this. The markets won't like it. And how far are we allowed to retrace on this? Well, from where we're at right now, which is just below 4.6, if we stay down below this trend line that we have here, right around 4.8, that's going to be very good for us. So I said I would tell you about one that I've been talking about for a while over in the Discord, and that one is IWM. Now, let me type it in the right way, IWM. And this is the ETF that tracks the Russell 2000. And this is one that I said that when we start to hear news of that pause in the rate cuts, that we could start moving on this. So this right here is the long-term trend line that we have here for historic support, and then right across here is that horizontal that we have, and you can see that we bounced off it pretty nicely. Let me zoom in so you can see the sort of movement that we had this past week. So we were all the way back on Monday. Where did we close on this thing on Monday? We closed at about 163, and then we closed at 174. So we had an $11 move in IWM, which is an ETF, like I said, that tracks the Russell 2000. And so this is one that I've made several different options plays on it. Take a look at what we have in the technicals here. The RSI has crossed up above 50. We have the 5 crossing the 13. We have closed just barely above what we have for the 50-day EMA, where came up and touched the 50-day SMA, which is also this trend line, that point of confluence, and retreated from it for a little bit. Now, importantly, getting back up above this trend line is where we're really going to start to see that bullish movement. So would I buy into this? Not yet, because I think it is possible. We might even make an inverse head and shoulders on this. Here's a possible potential shoulder. Here's that would be the potential head on that. And then this would be the neckline that we would watch taking place. And that would mean it would give more time for this 50-day to come down this way, show a better cross for us, and potentially that would be where we might get that significant move. And I think that the Russell 2000 stocks are going to start to do really well when we start to hear about the rate cuts coming in and potentially cheaper debt for those companies to take on, as they do have smaller market caps and they are less well-established businesses as we would have in something like the S&P 500, for example. So these are ones that are highly interest rate sensitive, got beaten down over time. One other thing I wanted to show you is look at the volumes on this. So maybe that's too much and you don't actually get to see it, but you can start to see the ramp up in volumes over the past 3 trading days that we had building over time, that we actually have significant inflows coming into this for the Russell 2000 stocks. I think that this has been beaten up throughout 2022. I think it's going to start showing us a little bit more of its potential. At the very least, we should get a decent range-bound trade on this, which takes us up almost to about that $200 mark. And right now, as of the last close we have, it is about 175. So that would be significant for us to get back up there. Probably be about a 15% gain that we could see in that ETF alone. So that could be a 15% return over the next 12 months, for example, would be something that I might think about that. If you guys would like to see how I'm playing these markets, what I do with my different options plays and the different stocks that I buy into, you can do that over at the Patreon. I also have my NVIDIA stock price prediction and earnings projection available over there. I have my options course that I'm building. I have the next video ready to go. I'm going to be putting that up either tonight or tomorrow. I'll post that so that way people can take a look at buying call options as an application rather than just an idea, as this takes you from the very beginner, don't know anything whatsoever about options, interested in options. You can check it out. You can learn about them, find out the different basics and fundamentals to them. And now we're starting to get into the applications in that course where you can start to learn how to apply them to the market and how to benefit from them. If you also want to know where I trade those options, I do that through the Moomoo app. And if you use that link down in the description, you get up to 16 free stocks. Down here are the deposit levels. Each stock is valued up to $2,000 a piece. And for $100, you get 5 free stocks. A $1,000 deposit gets you 15 free stocks and a free share of SoFi to go along with it. And something that Moomoo is putting in place is they're actually putting in a cash sweep program, and that would also give you yield. I believe it's over a 5% yield that you would get on that deposit that you would put in there for any cash that is sitting on the sidelines waiting to be used. So you would actually earn an interest rate on top of that. So not only are you getting the free stocks, you're getting access to a wonderful trading app that also has an options calculator and an options analyzer tool that you can use to help make those decisions on those options. But you also, on top of that, can earn a yield, like I said, on that money that you aren't currently using for any sort of trades or investment that you might be doing. So it can gain money through that interest rate in the meantime. Thank you guys for watching this video. Those markets, keep an eye on them. It is possible that we see more bullishness. It's possible that we retrace a little bit before that next leg up as well. I think November could be very, very good for us, especially if those interest rates hold out, especially if geopolitical tensions don't escalate on us. We still do have our concerns out there, and we just want to keep an eye on them as they develop. So putting all that stuff aside, the technicals, the way that they're showing us what we see happening with inflation, what we see happening from the Fed, what we see happening with the strength of the US dollar, what we see happening with the bond yields, all of those are very, very good signs for us, hitting at the right time for us. November could be a very good time, and it is possible we haven't seen the last of that strength come in. We're going to have to watch. We're going to see how it plays out. We're going to have to see the reports as they come out, what Jerome Powell has to say, what's happening around the globe. All of that stuff could impact everything that I say in this video. So keep an eye out, keep looking at it, keep watching this channel because I'll give updates throughout each week. And I also like to give a look ahead on what's coming up for us in the next week as well. Thank you guys for watching. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning, and we'll see you in the next video.